The US and EU are edging closer to a trade deal that would reduce the proposed tariff from 30% to 15% according to reports. Exemptions may apply to key sectors like aircraft, medicine and agriculture, but steel stays under a stiff 50% tariff.
India and the UK are set to ink a landmark free trade agreement today as Prime Minister Modi kicks off his two-nation tour. He will meet Prime Minister Starmer to talk trade. The deal will make several products, including clothes and shoes, cheaper. The deal targets 2x trade by 2030.
D-Street's opening gains betters out with Nifty falling below the 25,200 mark in broader indices, seeing deeper cuts. IT and real estate stocks continue to drag the market lower, while pharma and autos lend some support.
Infosys is muted in trade despite raising its lower end of the guidance on the back of cautious demand outlook. Brokerages remain mixed but cut targets while citing inexpensive valuations. Persistent, on the other hand, sees margin pressure in first quarter. MOSL cuts target.
And Tata Consumers braces for inflation-led margin pain after a mixed first quarter, but bets on a strong quarter two with growth business set to drive 30% of portfolio. Dr. Reddy sees pressure from US price erosion, but CDMO pipeline looks promising. But in the earnings to watch, Nestle eyes a steady quarter led by beverages and exports.
In more earnings today, Bajaj Finance could see healthy profit growth with stable asset quality, but margins may see a slight contraction. SBI Life may clock 7.5% VNB growth with improved margins as new business ticks up moderately.
And Mahanagar Gas under severe pressure even after profit and margins jump as the management cuts volume growth guidance for the year amid some stress in the CNG space. Meanwhile, investors seem to be giving a thumbs down to Natco Pharma's 2,000 crore buyout in the Adcock Ingram.
IEX tanks 10% after ET Now Newsbreak was confirmed. CERC approves coupling of power exchanges, which means the day-ahead market will be unified across exchanges by January 2026. The move aims to standardize prices and boost liquidity.
Centre receives investment proposals worth 16,000 crores under the electronic component manufacturing scheme aimed at boosting local production of lithium cells and PCBs. The scheme targets 40% value addition by 2030. Hello and welcome. You tune in to Buy Now Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar, and this is the show where we get all your stock related questions answered from our experts. You start sharing your questions, the buying price, the holding period and your stock query, and we'll get them answers. But before that, Kanishka, let's take a look at the market right now. Again, another day, another lackluster day where we actually gave up the gains from yesterday. 25,200 is what we managed to scale yesterday. At this point, we are off the day's lowest point, but hardly off the day's point on the Nifty. Almost an uptick of a minor 9 odd points from the day's lows, but we are below the 25,200 mark. In fact, we are very, very range bound yet again.
That's right. Like you said, we're very, very range bound, and we are trading close to that day's low level. If you take a look at the benchmarks, Nifty 50 that continues to trade lower, it has given up that 25,200 level that we touched yesterday. We did open above that, but it has given up that level and is currently trading 0.2% lower around that 25,165 level. On the other hand, the Sensex, which has also lost about 0.3%, trading at 82,500 levels, whereas the other benchmark, that is Nifty Bank, that is also seeing pressure, trading 0.3% lower at that 57,039 level. If we take a look at the contributors of the losses, Trend, Shriram Finance, Hero Motocorp, Tech Mahindra, Kotak Bank, these are all the stocks that are leading the losses on the Nifty 50, whereas the others that are limiting the downside. There is Eternal, Dr. Reddy's, Tata Motors, Tata Consumer, which reported its results today, whereas Geo Finance also. These are the ones that are limiting the downside. If you take a look at how things are doing sectorally, most of the indices are in red. Only Nifty Pharma, Nifty Auto and Metal are the ones that are holding on to the greens. Other than that, all the indices are in the red, with the Nifty IT and Realty leading the losses. And if we take a look at how the broader markets are faring now, NSE advanced decline ratio, that remains in the favor of declines, and that's how the market is looking. There's also a lot of stock specific action. For instance, Natco Pharma, that's down about 2.5%, as ICICI Security has cut its rating to reduce with the target price of 890 rupees. Eternal, as we have seen, has been buzzing since its results came out, and it's up almost 20% in the last 4 sessions. However, IT stocks, they are under pressure after we concluded the earnings, most of the earnings for the IT pack. Now, Persistent Systems, they're down hugely, down about 8.5% as we speak. Coforge 2 down almost 7%, whereas Emphasis, that's down about 2%, whereas Tech Mahindra, that also continues to trade in the red. So as I said, IT continues to lead the losses for the Nifty. So that's how the market setup is looking like largely. Ankita.
Right, Kanishka. So not much action coming in except for very stock-specific moves yet again on the back of earnings or news flow. But let me get on board our guest now who's joining us for the day. Our first guest is Sharmila Joshi, who's joining us. Hi, Sharmila. Thank you so much for joining us. Sharmila, before we start taking all the questions, let me come to you on how the market is really panning out. It's another day where, nothing much is happening as far as the frontline indices are concerned. There's not much action coming in. It's very, very stock specific based on earnings. We're clearly not following the global cues because, of course, there is a lot of optimism as far as the tariff deal with Japan is concerned. And India has been an underperformer as compared to the global peers. When do you think can Indian markets pick up a direction? Are we waiting for a tariff deal to come through? And how are you seeing the earnings so far? How well have they done according to you?
So that's a lot of questions, but let me just try and answer the best I can. I think, where markets are concerned now, you really need to approach the market with a sort of a 3-year horizon. Because honestly, this market is not even giving much joy to traders unless you manage to catch it at that inflection point. And we were sort of getting a sense that you will see a bit of a pullback at the start of this week, and now we are back again to correction. So I think precisely all the points that you outlined, you do need to wait out and see what kind of a trade deal we ultimately do end up signing, how soon that is. Because, honestly, these things take time, and the kind of, the horizon, the period that we were looking at is actually too less a number of days to really have a deal that is satisfying to both the parties involved. So, if you have to bring something to the table and there is a negotiation, then it is going to take more than 90 days or whatever. And it's precisely what we're seeing. Even if we are working at a very good speed, these things take time, and they should, because, this is not something to be taken lightly. And this will be a negotiation that will matter to us. So it should, there should be enough thought given to that. So I'm not looking at any date as far as that is concerned. But having said that, it will sort of impact the news flow that we hear, as well as the corrections that the market may make. And we are seeing a little bit of a pullback from FIs. I think coupled with that is the fact that the earnings season has been sort of okayish. It has not been the best. And while we have a lot of sort of good things to look forward to, if, monsoons as they are playing out, we will get the positive impact of that, as well as everything that has been, the rate cards, everything that has been done in the budget, etc. But none of it is really showing in the numbers as of now. So it's a bit of both, which is why I think that for the long-term investors, you look at stock-specific stories and maybe themes that you like, and invest with a 3-year sort of horizon.
All right, so long-term investors could look at some stock-specific theories and some themes. So that's the view coming in from Sharmila. But now let's get started with all the stock-specific queries that our viewers are sending us. But let me just remind you, you can share your queries on the number that is flashing on your screen. Do ping us and get investment analysis on your holdings and tips for fresh buys in the market. So write to us ASAP. Don't forget to mention your name, your stock's name, your holding period, and your investment time horizon alongside your specific query. So now, Sharmila, the first query is coming from you. For you. Now, this is Praveen writing from Bangalore. He has 22 shares of Ambuja Cement at a price of 589 and 35 shares of Bharat Electronics at a price of 393 rupees. He plans on holding these shares for 10 plus years. What's your view there?
We were talking of long term, so this sort of fits in that bracket. But there is only one caveat really that I would give, because I think both these are stocks that I like, and I don't really see any concern from currently from any perspective. I would really advise him to sort of revisit the stock as he has now, after maybe a couple of years, after maybe 2 or 3 years, and see that the basic thesis with which he has bought this stock, PL is of course, as we know, a defense story, PSU, etc. Ambuja Cement is now owned by the Adani Group and is a cement player. So cement is a very strong sector from an Indian perspective. We were talking a little while earlier of themes. I think both these themes fit into the 3-year horizon that you should be looking at. Defense, because of everything, the geopolitical things that have been happening. We do need to sort of include some or the other defense play as a part of our portfolio. And cement, because clearly I think where capex, expecting capex to pick up, and where we are in terms of the infrastructure and development that we need going forward, cement is going to have a pretty big role to play. And cement is one of those sectors which is directly proportional to your GDP. So if you're expecting India's GDP to go up, as we all are, then cement should be a sector to which you should have some exposure or focus. So having said all that, my only, as I'm saying, the only caveat I would put is to revisit the stock after 2 or 3 years and to see if both these sort of theories that we are talking of today are holding true for Ambuja Cement, and even from a fundamental perspective, things are, the deliverables, whether it is order books, whether it is execution, if all those things are good for them. As of now, I don't see any concern, but do revisit the stocks and continue to hold it.
All right, so that's the view coming in on BEL and Ambuja Cement. But let's get on board our next guest, Ajit Mishra, who's the SVP Research Religare Broking, who's also joining us on the technicals. Hi, Ajit. Thank you so much for joining us. Ajit, then let me come to you for this question. This is senior citizen again. There's no name. They're writing in. They want your advice on L&T. They have bought it at a buying price of 3,500. Should they be holding it? And they also have ITC Hotel at this current level. Can they add more of ITC hotels? What do you think, Ajit?
Hi, good morning. So first, if we talk about L&T, it's been almost 1.5 years now that the stock has been hovering in the range, and since he might be a long-term investor, so there's no point hurrying for the next directional move and all. I believe that the short term might remain range bound, means in the range of around 3,400 to 3,800, the stock might continue to hover. If his view is long term, definitely he can add more at current levels, or wait for a breakout above 3,800 mark. In that case, we will see the fresh momentum in L&T. The next target area could be close to around the record high zone first, and then probably around 4,200 mark. Definitely, he should stay put in L&T. For ITC hotels, of late we were seeing that stock was making a record highs. It's a recent listing. Still, it's holding its ground with marginal retracement after this recent swing. For fresh buying or adding to his existing position, a level close to around 230, 225 is a good area. So not at the current levels, but in case if the stocks witnesses any dip around 5 to 7% from the current area, definitely he can consider.
All right, so that's the view on ITC hotels and L&T. But on that note, with a very short break, be right back with more of your queries to be answered by our experts on the other side.
Welcome back. You tune into Buy Now Sell Now. Your stock specific questions will get answered here. The number is flashing on top of your screen. Keep sending in your questions and we have our experts to answer them. Let's resume with all the stock queries then. This one's coming from B. Mathur, who's writing in from Delhi. He's a senior citizen and a long-term investor. He says that he plans to invest 2 lakh rupees equally in Ashok Leyland and Hero Motors. Is it okay or any other better choices? Sharmila, let me come to you for this one. This is for a longer period investment. He wants to invest both in Ashok and Hero Motor, both from the auto pack. Do you concur, or is there any other name that you would like to suggest?
These are in fact 2 of favorite names within the sector, so I'm very happy that he has chosen these names. Ashok Leyland, because I like the story of the fact that their commercial vehicle sales and their numbers have been pretty strong. If you look at the kind of growth they've shown over the last year, within the auto pack, I think it's passenger vehicles which are finding themselves in a bit of a funk, but commercial vehicles stay strong. And the other piece that I like in Ashok Leyland is the fact that we are seeing an increasing sort of a usage and acceptance of electric buses in the metros. So for public transport as well as for delivery, we are seeing that shift to electric vehicles, and it's very apparent in, for instance, in Mumbai city, you do see a lot of BEST buses which are electric and air conditioned, very nice looking buses in fact. And I think this is a trend that's going to continue to all the metros. So this is going to be sort of an expanding order book for them. And in any case, I think they're on a strong track. They've just recently gone its bonus, but that said, I think this could become a good entry point for Ashok Leyland. Now, within the 3-wheelers, we have only we have 3 big listed players. We have TVS Motors, Bajaj Auto, and Hero Motors. And according to me, all 3 are very good. It is just a question of valuations. Hero Motor had a couple of things that went wrong for it, and we saw the correction and in the stock, and we are seeing the impact on their valuations. But now I think they're sort of getting back in their game together. So I think this would be a good time to really invest in Hero Motors. So again, they too have an electric bike exposure with the newly listed Ather. So that again is a positive for them. I think all the 3 players have some of the exposure to electric 2-wheelers. But that said, the valuations make Hero Motors, to my mind, the better of the 3 at this point in time. So definitely, I think you can go ahead and invest in both.
All right, so you could go ahead and invest in both Ashok Leyland and Hero MotoCorp. But Ajit, the next question coming for you. Now, this is Deepa writing from Bangalore. She wants to know whether CDSL is good to enter at the current levels. What is your view?
Artha, we are seeing a bit of a profit taking, means after retesting its previous swing high around 1800 mark, we are seeing gradual drift. Currently, the stock is hovering around short-term averages. So it seems like a kind of a base formation, but for the confirmation, we need a close above 1750 mark. So if the view is short-term, definitely one should wait and let the stock decisively reclaim that mark. Or in case if we see further corrections or less, maybe closer to around 1600 mark is something that she can consider to going long. So at current level, one should wait for a decisive break above 750 or a dip towards 1600 mark for fresh long positions.
From CDSL to the next counter. Now, we've already spoken about ITC hotels, but this one's from DJ Rao, who's writing in from Hyderabad. He wants to know the levels to re-enter. So he's already bought at a buying price of 169. He's made profit at 255. He wants to re-enter the counter. Firstly, Ajit, do you suggest re-entering the counter? And what are the levels that he could perhaps re-enter?
Right. So like what we've shared earlier, that the stock has already moved up very sharply of late, and after making this recent high, we're seeing gradual drift. It's likely to consolidate a bit after this strong directional move. So maybe closer to around 235 could be the area where one can consider adding first tranche and rest around 225 area. So within this range of 225 to 235, we can accumulate fresh.
All right, so that's the view on ITC hotels. But moving on to Aarti Industries then. Sharmila, this question is for you. So this viewer, PVN RA, he's written from Hyderabad. He's been holding 1,000 shares of Aarti Industries. He has had them for the past decade, but he says that it's not been performing as well in the past 2 to 3 years. So he wants to know whether he should sell at the current juncture or and buy a stock in the same sector, or should he consider another sector? If you could help us with a few of your picks.
Yeah. I sort of get his point, because what really had was that during the COVID years we saw very good numbers for a lot of these chemical companies, simply because there was a lot of diversion from business in China, etc., and a lot of people were looking for that China plus one sort of supplier they could buy from, and which is when we had seen a big improvement in all, I think, across the board sort of chemical plays. So they have been sort of range bound in this last couple of years, and we have seen inventory build-ups, etc. But I think the good news is that now that we are getting out of that period and things are sort of normalized, and hopefully return ratios should get better. So I would really recommend a hold at this stage. I think perhaps revisit the stock when it gets back to that 500, 600 kind of level, and then see where you want to, whether you want to sort of go to another chemical play or to another sector. But as of now, at this current price and valuation, and the fact that things are improving, I would recommend it.
Right, so that's the view coming in there, but let's move on to the next question. This is coming in from Mahalakshmi, who's writing in from Hyderabad. She says she's holding 133 shares of TCS at a buying price of 3,360 rupees since 2023. She wants to know if she should add more by way of SIP for the long term. Also, the IT sector allotment in her portfolio is now 16%. Sharmila, let me come to you for the long-term question. IT holds 16%. She wants to hold it for the longer term, and should she add more to TCS?
There was some data that I'd seen some days back, and it spoke about stocks which are not given any sort of flattish to no return over the last 3 years. And in that period, TCS sort of made the list, which is a little unfortunate. But given the fact that environment for IT still continues to be challenging, the valuations look okay, but the environment looks challenging. So expecting any outperformance from the stock, I think, would be a stretch. So let's just hold what we have, since the valuations, as I said, are compelling, and since her holding is already 16%, I think that's enough. Maybe you should just invest that money in another sector altogether.
Okay, so that's the view on TCS. But from the IT pack, moving on to, the healthcare pack. Ajit, this question is for you. This is Sandeep writing from Hyderabad. He's bought 30 shares of Max Healthcare at a price of 1,281 rupees. He wants to know the target for the next 3 and 6 months. Can you help us with that?
So, in fact, the healthcare as a basket has been doing exceptionally well from the last 3-4 months. We are seeing almost all these stocks, be it Apollo, Astra D, Narayan Herdale, Max Health. All these stocks are either trading at their 52 weeks high or inching towards the same. So, after this recent surge in Max Healthcare, we've seen a marginal drift, and still the tone is positive. So, yes, he can continue to hold his position. We believe that from the 3 to 6 months of time horizon, probably close around 1450 to 1500 is something that the stock might test. So with stop at 1175 on the closing basis, he can definitely stay put.
All right, before we get going with all the other questions, then let's take a look at the earnings corner. Nestle India has posted its number. It is flashing below the screen. Let me read out the numbers for you, and as compared to ET Now's estimates, how well they have fared. I would say that we were suggesting a decent set of numbers, and if you look at the scorecard, the revenue that has come in is largely in line with what ET Now was penciling in, though there is a miss on the EBITDA and the PAT front, and margins also likely to be in line with what we were estimating. Let me read out the numbers for you then. As far as revenue is concerned, that's seeing an uptick of 5.9% on a year-on-year basis. We were expecting the revenues coming up at 6%, so it's a largely in-line set of revenue that's come in. As far as the profitability is concerned, if you look at the net profit, that's down 11.7% on a year-on-year basis, and we were expecting an uptick of 1.7% on the PAT front. So clearly there's a miss coming in as far as PAT is concerned. EBITDA is down 1.3% on a year-on-year basis, while we were expecting an uptick of 6%. The margins are seeing a downtick of 156 basis points on a year-on-year basis at 21.6%, while we were expecting stable margins. So margin is thereabouts, largely in line with what ET now was expecting. We'll read out the details, more details coming out, but let me come to Gaurang Shah, who's now joining us, Senior Vice President, Geojit Investments, to weigh in on the numbers for Nestle India. Hi Gaurang, thank you so much for joining us today. Gaurang, we have just read out the first cut of numbers that have come out for Nestle. Tell me, how are you reading into the numbers?
Well, thank you so much for having me on the show. Good morning to all of you all. So, firstly, a disclosure from our research team. We have a fundamental positive call as far as Nestle is concerned on numbers. Whatever is reported and whatever you elaborated, slight marginal bit of disappointment, but our understanding is that the entire FMCG pack is likely to do well given the demand growth that is likely to come through because of good monsoon and, of course, whatever relief that has been given in terms of tax relief by the Honorable Finance Minister. Constraints could be there in the short to medium term because of certain issues for the FMCG pack, including Nestle. But we expect the volume growth to come in. Thanks to lower input cost and, of course, lower crude oil prices, we could have some operational efficiencies also that could possibly improve the margins going into the future.
All right. Hi, Gaurang. So this is Kanishka also joining in. It's a largely positive set of numbers coming in for Nestle. But I wanted to ask you, how would you compare Nestle's performance to the rest of its peers, given that Nestle's management has said that it is noticing stabilizing prices for edible oil and cocoa and a declining trend in coffee, there's stabilizing to modest increase in pricing of milk as well. So how would you compare the performance of Nestle to other peers like Tata Consumers, which reported its results yesterday?
So a little bit better according to what numbers have been there. But like I mentioned, as a sector, our fundamental team has a call on the positive side. And one quarter number should not be a deciding factor according to us on your long-term investments, basically. And we all know India is, and India will always remain a consumption-driven growth story. And with good monsoon and relief on the tax front, I think October onwards, there should be green shoots visible in terms of consumption and volume growth.
So, Gaurang is saying that there could be an improvement in the second half, perhaps when the volumes could pick up, and so can the consumption because of the tax relief that will start showing in the numbers. But what are going to be the headwinds, Gaurang, going ahead for the FMCG pack? And as you mentioned that, as compared to Tata Consumers, the numbers that came out yesterday, you see Nestle to be on a better footing. Going ahead, what can augur well for Nestle, and what are the headwinds for Nestle going ahead?
The problem right now is with respect to crude oil prices and input cost. Given the geopolitical tension and, of course, the concerns on the volatility front, I think the biggest concern would be in terms of your logistic cost going up, your transportation cost going up, any kind of pressure on the input cost in terms of raw material prices. That could lead to a little bit of unpleasant surprise. So these are some unknown factors which only be known in the near term as we go into the future.
All right. Thank you, Gaurang sir. Thank you so much for sharing your first thoughts about Nestle's result and the FMCG sector as a whole. But on that note, we'll let you go. Thank you so much for joining us this morning. Snehi is now standing by with the fine print of Nestle's Q1 numbers. Snehi, over to you. How are the numbers looking? Revenue and margins are in line, but EBITDA and PAT have seen a miss as compared to our ET Now poll.
Well, absolutely. So let's take a look at Nestle's Q1 earnings fine print coming in. If you take a look at what these numbers are looking like, it's largely a mixed set coming in. We had estimated a decent to muted quarter. So in line with that, standalone revenue has come in at 5,096 crore rupees, which is an uptick of 5.9% year on year, in line with our estimates. EBITDA has come in at 1,100 crores, a cut of 1.3%, a miss versus our estimates. EBITDA margin has come in at 21.6. We were expecting this number to remain stable given the last number at 21.3, so slightly better versus our estimates, but largely in line once again. It's the net profit this time around that has disappointed as well, coming in at just 659 crore rupees, a steep cut of 11.7% on a year-on-year basis. So that is a miss versus our estimates. Now, if you take a look at their segmental performance, Nestle has said that their India business has turned to volume-led growth largely across business categories. Powdered detergents and liquid beverages, they've done well, which was in line with our estimates, and it's also one of the largest growth drivers of the company. They've registered strong double-digit growth over here. Prepared dishes and cooking aids have swung back to volume growth. Maggi has done very well with a double-digit growth. Confectionery growth has seen high double-digit growth in line with our estimates. And Kit Kat is the top leader when it comes to confectioneries. Good growth coming in for the Kit Kat chocolate as well. Milk product and nutrition are lagging performance, and this is also what we had penciled in. Nestle breakfast cereals business has reported high double-digit growth. Their pet food business has also witnessed a strong performance. What the management has to say that the quarter was impacted by elevated consumption prices across the commodity portfolio. They have noticed the stabilizing prices for edible oil and cocoa, and the declining trend in coffee, and price action will be taken accordingly going ahead. And lastly, the out-of-home consumption business also grew in double digits. So all in all, segmentally, while it's looking pretty okay, on the operational front, it's a miss versus our estimate coming in. All eyes are going to be on the brokerage estimates for the volume number, because the company does not provide that.
All right, so a decent set of numbers, largely in line, but like we mentioned, there's a miss coming in as far as the EBITDA and the margins are concerned. But you know, the stock is actually taking a knock of almost 3% as of now, right after the results have come out. So the street is giving it a thumbs down for now. But with that, it's time for us to slip into a short break. Don't go anywhere. Now, where we're getting all your stock-specific queries answered. Let's go to a guest then. And before we get started with all the questions, I want to come to you, Ajit, on Nestle's numbers that have just come out. We heard Gaurang speak about Nestle on the fundamentals, but on the charts, how does Nestle look like to you? In fact, now it's seeing a downtick of almost 4% in trade, a sharp knock coming in after the numbers. On the charts, what do you see for Nestle?
Right. So, like, we were seeing gradual recovery for almost 2-3 months now, and it's reflecting across the FMCG basket. But the single-day decline has engulfed the gain of almost 2 months now, and the stock is back to its major averages. So, in case if the view is short-term and somebody is holding long positions, 2300 should be the strict stop loss, because that was the swing low that the stock recently made, and that is below the major averages also. So in case if it reaches that mark, then probably we are heading for further decline towards 2200 levels or maybe lower. So in case if we see any bounce from the current area, then probably around 2400, 2420 is something the stock might witness hurdle. So on that area also, one should look to liquidate their position, because likely to remain in the range with slightly on the negative bias.
All right, so those are the levels to track for Nestle India. The stock has been trading about 4.5% lower ever since we got the results just a while back. Now, getting back to queries, Ajit, this query is for you. This is Pratiksha writing from Muscat. She's been holding Info Edge shares with a profit of 25%. She hasn't given us her holding price, but she's been holding profits of 25%. She wants to know whether she can continue holding for another 6 months, or should she exit at this juncture, and if she should, if you could suggest another pick to enter.
If she has bought it with some return expectation in mind, she can definitely consider booking some partial profit around the current area. But overall, if you see Info Edge Naukri, it's been holding strong. Means, in fact, the stock has already witnessed a decent correction of late, and now we are seeing a recovery phase. And probably this recovery can further strengthen once we cross 1560, 1570 area. So she can definitely book at least partial profit around the current levels and wait for a breakout above 1560. For a newer highs, maybe around 1800 mark is something that she can consider booking complete. When it comes to switching to some other counters, we feel Fortis Healthcare, wherein we are seeing consistency in the trend. Apollo Hospital, also from the healthcare space. Then Ipca Lab, wherein we are seeing fresh breakout from the pharma space. There are some of these stocks that she can consider.
All right. Moving on then to the next question that's coming in by Mahesh, who's a senior citizen who's writing in from Delhi. He says he has 500 shares of AB Capital, he's bought it at a buying price of 205. Sharmila, let me come to you for this one. He wants to know if he should be holding on to it or should he be exiting. Now, 4 months is a smaller time frame, Sharmila, for AB Capital. We have been talking about AB Capital and constructive view on it, but what is, in your opinion, what is your opinion on AB Capital and the holding period for it?
So my problem is with the holding period. Otherwise, I'm very comfortable with the stock. I think the kind of numbers that they have given and the sort of growth that they have shown over the next year and a half, as well as their plans for the future, they seem to be moving along at a good pace. And I overall, this is again one of those sectors that I do like, and within that space, this would be one of the stocks. Only valuations are looking a little expensive at this point in time. So I don't know whether 4 months is going to give you any significant returns from current levels. But if you were talking of the longer term, like about 12 to 18 months, then I would say it's a definite go.
All right, thanks Sharmila for that view. On that note, we'll let you go on, and also it's time to take a very short break on this edition of Buy Now Sell Now. We'll be right back with more on the other side.
Welcome back. You tune in to Buy Now, Sell Now. Well, let's take stock of how the market is shaping at this juncture. In fact, we are below the 25,100 mark as far as Nifty is concerned. We are at the lowest point of the day. Now, remember, we had managed to scale the 25,200 levels yesterday. We have given up all those gains, and now we are trading towards the lowest point of the day with cuts of almost 125 odd points, almost 0.5% cut coming in on Nifty. Nifty Bank also following suit, trading at the lowest point of the day with cuts of almost 4/10 for 0.5% cut coming in on Nifty Bank as well. And at this juncture, the broader market is seeing a sharper knock that's underperforming the benchmark indices. Mid caps down almost 0.6% and small caps is trading down 0.9% in the trading session. And within that, we have the biggest losers from the IT pack, Coforge and Persistent System, that is weighing down the IT index as well on the back of results. So that's seeing a sharp knock broader markets. And as of now, we have given up those gains like you see on the screen. Nifty is down almost 155 odd points from the day's highs. But with that, it's a wrap on this edition of Buy Now Sell Now. Kanishka and I will see you tomorrow at 11. Keep sending in your stock related questions and we'll get them answered. Stay tuned. Thank you so much for tuning in.